dear friends, this is Vivek Bajaj, co-founder of StockEdge and Elearnmarkets. Yet another face-to-face global and yet another superstar who is doing wonderful work in global markets as a trader. Friends, face-to-face is all about connecting you with right people so that you can gain knowledge as well as wisdom from there. And my endeavors of going global and finding right people who will give you right knowledge is something which I'm enjoying so much because I'm learning in the process, and also you guys are also learning. Today, we are going to talk about TechnoFunda market participation. What is this TechnoFunda market participation? When you trade in only stocks which looks to be fundamentally good. Today, we have someone from US. He has been practicing TechnoFunda market participation for many years now, and he's going to open up. He's going to share a lot of his methods. So guys, hang on and please watch the videos till the end, because the whole essence of the learning is complete only when you stay till the end. I hope you're going to enjoy the learning. Let me welcome Mark Ritchie into this discussion. Hello, Mark.
Hello, Vivek. Thanks for having me. Hello from the United States for everybody overseas. Great to be here.
Thank you so much, and it's my pleasure to have you. Good morning from India and good evening from US. Great. So, Mark, I've been following you on Twitter, and that's how I connect with people like you. It's such a great platform, that we can connect with each other without geographical boundaries. So I found you that you are doing some interesting work. So and you showed your willingness to share your work with us. That's so great of you. So tell me about you before we do deep dive about your process of participation. So how long have you been participating in the market?
So I've been a full-time trader really since 2007, but managing money for myself and sort of a friends and family private fund since 2010. So okay. 12 years on my own, and then another 3 before that trying to figure things out. Still trying to figure things out. You never stop learning. But yeah, that's a general summary.
Yeah, absolutely. So 2007 was a great period to be in the market. That 2007-8 rally, did you make money and made up your base during that time?
I was actually working for someone else as sort of a proprietary type shop. It was actually not a very good. It was a terrible situation. Let me be honest. So I went on my own more in desperation than as a result of initial success. I'm happy to get into some of that story, but that you're right though, in terms of that was baptism by fire, because you got to see, the end of one of the great bull runs and one of the all-time great, bear maulings, for lack of a better word, in 07, 08. So anybody who says things like, well, we'll never have a decline like that, or prices can't go that low, or those types of things, you haven't been around long enough. So it was a good, healthy backdrop, in my opinion. It gave you a high level of at least fear and respect for risk.
Yeah, absolutely. And you started as a trader, as you said. You started in a prop shop. So was it as a trader or as an analyst or an investor?
Well, it was a little bit of everything. And so just to give you a little bit of, some people may know, I come from a little bit of a trading family. My dad's actually a retired trader, and a few of my uncles as well. They were more floor type traders and sort of the old way of doing things. This was a little bit more of, placing orders, doing a little bit of research. Somebody who was trying to grow a prop shop turned out wasn't really successful at all. So usually the way I kind of tell the summary of the story was I worked there for a couple of years and didn't really understand a whole lot about markets. And then kind of in the middle, really just got curious, really got the bug in terms of, well, why do certain markets go up, and why does this market keep going up and this one keep going down, or this is in a range, and what's really driving these moves? and just kind of even getting interested in terms of what type of approaches actually show any statistical significance.
Yeah.
And some of this was born out of frustration because the gentleman I worked for didn't seem very disciplined. He didn't seem like he had a process. None of these, and he didn't seem like he had very good results. So it was sort of almost in some ways like you learn to do things wrong, first, or you hear these stories of guys who had these colossal wipeouts to start their career. That's kind of how I look at that period of my evolution. Once I went on my own, it was like you have to have some things absolutely defined first. And I did have a little bit of a financial setback as well in that experience. So all those things were those lessons were learned in one way or the other. But yeah, I didn't have anything close to the process I have now, which has been an evolution that I'm happy to get into. But yeah, there wasn't much of it wasn't a great training ground, to be honest. I would be lying if I said, that guy taught me everything I knew. It was more of finding other mentors when I went on my own, some of which people probably know about from Momentum Masters or Market Wizards, things like that, and then adapting, myself to kind of that style.
But at least he taught you what not to do in the market, right?
Certainly.
Which you would have gained the knowledge by experiencing on the own, and market would have taught you. But that learning would have been very lethal. No?
Absolutely. And listen, I do a fair bit of educating. The reason I even do stuff like this, like you said, I just started to get more active on Twitter, but a lot of this is to give back. I've been very fortunate, to have some good mentors and teachers. And I think, if you've had success in this business, it's usually due to learning from others. So you need to be willing to share some of these things, and some of these lessons, if you learn them early, aren't nearly as painful as they can be later. So, and anybody who's watching this that has gone through that knows what I'm talking about.
Yeah.
Those of you that haven't, to your point from before, the market has a healthy way of doling out pain at times and to teach you those lessons.
True that. It's still teaching me. Last week has been one of the learnings. The way it is behaving right now, still teaching.
Sure.
So you took 3 years before you figured out the process for yourself, and then you decided to go all in and get into this full time, right? So, I mean, you said that from 2010 you were like full time into it.
So really, it wasn't that I figured everything out. It was more of the operation I was working for was shutting down completely.
Okay.
So, and as far as inauspicious starts go, the gentleman I was working for was actually guilty of financial fraud on top. So me probably even trying to go work for another shop at that point may have been difficult. So I borrowed a little bit of money from my father and just decided let's see if I can do this. And so you want to talk a little bit about pressure, and that was it. I didn't actually have anywhere close to the process I do now. It took a couple of years, and a really good mentor, and generally though, since about 2010, late 2010, 2011, I've pretty much been running the same process on a daily, weekly basis for more than a decade.
Wow. And people say that the process actually has to evolve. Otherwise, since market is evolving, you may not use the same process which used to follow earlier. So
yes, and that's a really great point. I can add some. I think that's a good point you just made. It's not. It has evolved in the sense that it is not a process that I don't dictate to the screens I run necessarily what they're going to show me. So I use that as sort of my pre-game filter. And then based upon what I'm seeing, I let that form my view. rather
Okay.
than having a rigid view. I try and let the process guide me,
Okay.
so that yes, if we're in a completely different market regime, and over the past 3 or 4 months, we've been in a massively shifting regime, in my opinion. Really, probably 6 months in the U.S. I don't look at the Indian markets very much, but of what little I've looked at, even at the Nifty 50, there's been quite a bit of pressure there over the last several months as well. I think this is a global phenomenon that we're
Yeah.
seeing. Nevertheless, though, I don't wind up getting stuck or caught in some of these moves because the process is fluid enough to sort of give me a heads up when things are changing.
Nice. So we'd like to know that process. So I hope that you will literally share everything about the process. So how do you look at it? How do you start from step zero to what software do you use? Let me just know everything about it. So please share your screen and take us through the process. And while you take us through the process, I'll have a lot of questions.
Sure.
I can see the screen.
Okay, great. So yeah, this is the general screening software that I use called MarketSmith. Some people are probably familiar with this.
Yeah.
And really, what it is just a series of screens that I run usually every single day. Some of these I don't run every day. I've got a bunch of these different ones over here. But
Oh,
the main screens I run that I've been running every day for over a decade are this RS screen,
mm-hmm,
composite screen, and the IPO screen.
mm-hmm.
So each one has between 150 to 200 stocks
Okay.
that I screen through.
Mm-hmm,
I run those. So I'm screening between, say, 500 and 700 names a day.
mm-hmm.
Uh, and then I just run them faithfully. And from that work, I will grab any stock that I think looks technically interesting.
Okay.
And for me, the best guide for my technical work is probably Mark Minervini's books,
Okay.
because I am a sort of a disciple, a student of his. Um, but it's really just looking for these low risk technical entry points,
Mm,
really stocks that are relatively strong. So if you could only give me one screen, you
mm.
locked me in a prison cell and said I can only use one screen, you're going to slide me charts from that screen, it would be the relative strength. So this screen here is very simple. Um, it is I run the top 2 or 3 relative strength stocks. So everything in the top 1 to 3% of the market. The strongest, the way the rankings go is 97, 98, 99 would be the top 3%. But think of it as the highest price action or strongest stocks in terms of price action relative to the S&P 500
Okay.
is what I'm looking at. So there's a really good example of, I'm not saying what stocks show up in the screen. I'm letting the market tell me, where is the strength, Vivek? That's
Okay.
what I want to know. And I want to know it every day, day after day, after day, after day. And you'd be shocked how many times, if you just run this screen and
Mm,
take your eyes off the indexes, in
mm,
my view, this will tell you more about the risk appetite for the market and for managers than
mm.
about any other indicator I have. Most people don't believe me. They don't, that doesn't really work. How can you trade the markets and not look at the Dow or the S&P? Well, this is how I do it. Because I'll give you an example.
Mm,
Right now, the highest relative strength stocks and this is talking about the US, but you
mm.
can, whatever market you're trading, I would do the same thing. So, to my point before, if you only gave me one screen, I
Yeah.
want the screen of the market you're making me trade. So if you're gonna bring me over to India and say, okay, you can't trade anything but the Indian market, I'm gonna say,
Yeah.
okay, show me the top 2% of what's holding up the best in the Indian market. If you take me to some other country, I'm gonna do the same. I'm gonna do the same thing.
Sure,
Um,
sure.
so right now is a good example. Here in the United States, by far and away the strongest group is oil and gas, followed by other areas of safety,
Mm,
specifically REITs,
mm,
insurance, banks, and areas of the market that it is clear to me that if those areas are holding up the best,
mm,
I don't need to know much more. I can probably, if I came out of a coma
mm,
and I hadn't even looked at the market and I ran this screen today and you didn't tell me where the stock market was, I'd say we're obviously in a correction
mm, mm,
because managers are not willing to take risk. The stocks that are the most bid are all cautionary plays. Now,
right.
oil's a little bit of a caveat, but even then, historically speaking, when oil is leading above other areas, above high tech, above semiconductors, above consumer retail and leisure and entertainment type stocks, it's just not a great sign for momentum and growth in the market.
Mm,
So generally, that would signal caution. Some people, I get labeled a momentum or a growth trader. Well, it's true because that's where I've made, all my money is trading generally
mm,
those type of names. I'll trade oil, and we'll go over, a trade I did in that or earlier
mm,
this year,
mm,
if or when they set up. But I like to see, so if the picture was completely different and it was biotechnology and um, enterprise software
mm,
and social media, leisure entertainment type stocks that were all leading, stocks with big earnings and sales,
mm.
um, that would tell me that there's a healthy risk appetite in the market and make me potentially more constructive, more bullish, and willing to put more money on the line.
Mm.
It's just that simple, where I could run this screen again in 3 months' time, and the list will have completely shifted. So
Absolutely.
I bend with the market. I don't ever argue with it. And the same goes for a position. If I'm in a
Mm,
position and the market is telling me I'm wrong, then I'm wrong as far as I'm concerned. When
yeah.
I hear when I hear people say like, um, the market's wrong, or I'm not wrong, I'm just early, I get, generally speaking, very nervous when
Mm.
I hear people talk that way.
Sure. So, relative strength is something which I practice a lot in Indian market. In fact, I have a tool called StockEdge where we have specifically relative strength scanners. And I totally agree to what you said that it's just one scanner which you need in your life to participate wisely in market is relative strength. So good, interesting to know that you also practice it. I didn't know that you do that. So this is actually giving me more excitement. So tell me, now that the ranking is here, and every software has their own ways of ranking relative strength stocks. So we probably will do it in a different manner. So now we have in this scanner, we have 227 items. And the top stock, which we can clearly see is Extra Run Corporation, right? The
Mm-hmm.
scan which you have run. So this one.
Yep. Sorry.
So
Right.
so now how do you make that decision that when to buy this stock? If at all we have to buy this one.
Right. And this is where, so normally I will run all the screens and I will go through them relatively quickly.
Okay.
Meaning I'll look at a chart for a few seconds. If it
Yeah.
doesn't catch my eye, I just kind of skip over it. And part of this is it's a discipline and a practice, and the more you do it, kind of the better you get.
Yeah.
What I'm really looking for then is what I think are good low risk technical areas. And what I mean by that is there are areas where I think if you're running a high relative strength screen, all these stocks are going to be in a short-term uptrend for sure, because they're obviously trading very strong relative to the market.
Yeah.
I'm saying this, for folks that are new, and most likely they'll be in a longer-term uptrend. And usually those are sort of embedded within the screen. So sometimes people will say, "Hey, what do you think about XYZ stock?" And I haven't seen the chart at all, because it's in a long term. If it's in a long-term downtrend, I'm not even going to see it. So that's baked into the cake, if you will. So now I'm just looking for, is there a consolidation that I like technically, where I can be proven right or wrong quickly. So the reason I like tighter low risk entry points isn't just so maybe I can take a bigger position or that type of thing. It's so that I can know with relative consistency quickly if I'm right or wrong, because I don't want to be stuck in a name not knowing if I'm right or wrong. And this is a point I make the point, I feel like, all the time. Most people don't seem to understand, though, that if you're trading actively, you're trying to put your money where it's most efficient.
Yeah.
And time is money.
Yeah.
Sometimes, So I talked to, and this is especially true for people who don't want to take losses. Just take a loss and move your capital somewhere else where it's going to be more efficient. I say this for people that a lot of times people don't want to take losses because they feel like, well, then the loss is real if I realize it. And it's like, but there could be 5 other stocks, 10 other ideas maybe that you traded in and out of and made money on while you held this other stock that was going nowhere or going down even worse. So that's really the beauty, is that ability to know quickly if you're right or wrong. And so what I'll do is I'll just go through. I can give you an example here. Like a stock like this, I wouldn't even put it on another watch list. And I'll just keep scrolling through. Go to the next one, not even close. Go to the next one. None of these are interesting to me, and I'll just scroll through. I would say probably 1 to 2% of the stocks I screen even will make then another watch list. So to give you an example then of how I actually, when and where I'll trade something, I should probably just give you a trade I did earlier in the year, which came off the relative strength list. If you want to, if you want to go that. Nope, wrong symbol. Sorry, that's Schlumberger, not Silicon Laboratory. So this was a stock that was on. It was on this high relative strength screen right over here.
Okay.
Can you see my cursor?
Yeah.
So I was watching this in real time. It had this really nice explosive move. And it was just going sideways when the market started coming down. So you can see right here, the relative strength line was really high, and it was just going sideways when the market was coming off.
Yeah.
And then this stock tightened up right here.
Yeah.
And I think I should be able to draw a line here. I was buying on this day right here.
Okay.
As it was coming through this little pivot point right there.
Oh, so you look at the immediate swing high breakout?
I did. In this case, I basically just did a measurement, between this high and the low.
Mm-hmm.
It was roughly, $13 against a $206 stock.
Mm-hmm.
Mid single digits in terms of a stop, in terms of percentage.
Mm-hmm.
And it was holding up extremely well.
Mm-hmm.
So I initiated a buy on this is 1223.
Mm-hmm.
This is a classic textbook type example. You can also see volume was kind of was coming down, which I like to see. This is a textbook example of how I would buy and how a loser works for me. This, if this is all my losers look like this.
Okay, but when the volume is coming down and the stock is giving breakout, so don't you think it's a false breakout? Chances of a false breakout?
Yes, I was saying. Sorry, I was pointing out volume. Volume in here is what I meant was a little bit lower,
sure,
below average. It was kind of moving sideways.
Okay.
Yeah, this day we had a little bit of higher volume. I think that was a rebalancing day.
Okay.
So I did discount that. No, I would have liked to see this. Clearly, just didn't get going. We never got any volume confirmation.
Yeah.
It limped around, and then when the market came off, it just. I stopped out right on.
So this was your wrong trade, basically.
This was the textbook loser.
Textbook loser, yeah. And how did you keep your stop loss? Like, where was your stop loss?
I would have to look at my actual P&L, but generally I would put a stop right either below here, or I would stagger a stop, and do maybe half in the middle and half at the bottom, or something like that. If this range is a little wider than I'm comfortable, so normally what I want to do, Vivek, is I want to get out of the trade when the chart starts to sour, or the chart is going to require more time to look the way I want it to look and heal than I'm willing to sit through. So sometimes there are cases where, in this case, this little contraction right here, if this larger move is going to continue, this low after you take this high out should hold.
Yeah.
So the minute it doesn't, now normally this is a trailing 50. A close below that is also a violation for me. So now that I look at it, I am positive I sold at least a piece in here when it closed below the 50 and cleaned up the rest of the position when it closed below there. And generally speaking,
this is moving average 50.
Yes.
Okay, sure.
And I don't trade off those. Those are more of a reference point.
Okay.
So like I would never buy into a 50 or a 20. But they are, like there are a few, if I buy a breakout in a strong name and it closes below the 20 or the 50 within a few days of when I buy it and it hasn't hit my stop, I will trim.
Sure.
And sometimes I'll just step out of the whole position. If it's a big position though, I will absolutely trim. I'm not, and as a general rule in a trade like this is 6-7% stop. I will not hold the entire position if I'm in a big position down to that low. I will incrementally pair out of the position, and often I will incrementally pair in. So I might buy a little bit on one day and buy a little bit more if I like the way it's acting and I like how the market is acting. Does that make sense?
Sure. Got a point. So this is the wrong trade. Let's see one right trade.
Okay. Yeah. And I am wrong on average more than I'm right. Just so folks know, I'm only right about 40% of the time.
Okay.
So I win less, at least.
But when you win big.
Well, I tend historically I tend to win about 3 times what I lose.
Yeah. Okay. Got it. So with that 40% success ratio, also you make money because you are 3 times making more money. Yeah.
Right. So this is the XLE Energy Spider in the U.S., which is really kind of the largest oil gas type ETF. And at the beginning of the year, this was the strongest group, and a lot of oil names were in bases. So I'm showing this first because I didn't actually trade this, but this was one of my cues because and it plays right into the screen I was running before. So generally, I don't favor commodities. I will trade them from time to time. So when I was running this high relative strength screen, there were just tons of oil and gas names. In December, late December, I mean, just tons of them. So when there's so many of them, and they all had these little pivots on the right hand side in different areas. And so I was focused right in here, right around the first of the year. And this is a classic, what Mark Minervini would call a cheat area, where you get a pivot that develops in the middle of a base and volatility starts to contract. And you can, to me, it's just a classic little low risk entry point. And here you can see volume contracted while this stock this is an ETF, but just gently drifted back. So I'll show you what I actually played, which was in the group. So I'm sitting there then, I'm going, what's the strongest stock inside of this group? Is it set up? And that was Devon Energy.
Oh, okay.
Same here though. See the difference? This is right near the highs.
Yeah.
So if I draw a line here, I draw a line here. While the XLE was in the middle of the range, this was almost at new highs. And the reason I prefer, listen, if I get a pivot near new highs, that is a good pivot, I would much prefer that to anything that's still in the range because it has less supply. So if you think about this from a psychological standpoint, the minute this stock breaks out right here and goes into new high ground, everybody who owns it is happy.
Yeah.
No one is panicking.
Yeah.
No one when stocks are hitting new, other than, there's a few shorts obviously getting run over, but that's such a small percentage of the float. Nobody, and look, this just lifts nicely into new high ground for 2 weeks. If you use, so how I did it was, I bought a little bit as it came through the high on this day, and then I doubled the position up as it went into new high ground through this red line. And this is a classic way I do things. I always want a pyramid up, and average up, never down.
Yeah.
And I am that way. I'm trading my biggest size when the position is doing what I want it to be doing, not the opposite. Because if a stock is going to go higher, it has to turn around and go higher first. So I would rather pay up. And I could share more reasons why it's a better idea to trade that way, especially if you're trading higher relative strength type stocks, and those type of names. Well, you can see here, on this first day, the high was 44.30, the low was 43.30. I was basically taking $1 risk. So you don't need to get in very far into new high ground to make a multiple of your risk there. If you take the other pivot at 45.30 down to 43, it's $2. So on the combined position, I was at about $1.50 of my risk. The stock, with ease went up, six-ish bucks. So I was, 3-4 times my risk in 7 days. That's a perfect swing trade for me.
Sure. But suppose you didn't book the profits and later into 3 days, you see there is a massive fall and you already have large position, which you build by pyramiding as well. How do you handle this kind of a fall?
Yeah, this was fortunate for me because I have a rule that if I am at a multiple of my risk, and for me, that means at least usually 2 times whatever I was risking on the trade, I'm not going to let that turn into a loser.
Okay.
It may not be a winner, but I've found both in terms of a open P&L give back, that it's financially and emotionally destabilizing.
Yeah.
I'm not saying it's not, it may not, in this case, you can always say, well, look, and here's a really good example. I would have been just clipped out if I'd used just below this range, which you could argue might have been too tight. But if this was my original stop and I'm at 3-4 times my risk up here, I'm not going to let that knock me out of a loser. Most likely what I would do is probably when it starts to trade off, if I want to stick with the position, I may cut half and move my stop to where I can have a break even on the trade and move the stop a little lower. Does that make sense?
Okay.
But in a trade where I'm at many multiples, usually I'm going to move my stop to even and just let the stock take me out there. That's a cost of doing business.
Okay. So this is not then fixed rule that you will book half in 2 times profit, right?
Well, so when I'm at 2 times profit, the rule is no taking a loss. I'm not necessarily, meaning I have now put myself in a position where I don't want to be a loser in this trade. But often I will. In this case, so if you're asking, well, why did you just sell oil? Well, I sold it because generally my record in oil and commodities is not very good in terms of playing for bigger moves. So I treat these even more short term. If they set up and I can trade them, I turn them and burn them. I just I'll take the money and run rather than trying to play it out for a bigger move. Now there were a lot of other names, going back to the XLE example, where you could have used the same logic, I believe, and it wouldn't, here the XLE didn't pull back near as much.
Yeah.
So you'd have been fine to play this for an even bigger move. There were some oil names pulled in more than others, and look, this is trading. If you're going to be more of a trader, you're going to have situations where anytime you're using tight stops and managing risk in real time, there are times you're going to feel like a dummy. That's part of being in this style. And I can promise you, you're gonna have to get used to that. I've sold the lows more times than I can remember in certain stocks, only to watch them go higher. I've also, back to my example from before, if you don't stop out of this name and go, it's just coming back, you've gotten buried now. This sell over here looks pretty good. So it's always to avoid this. And the same logic applies to the winner, that, well, I had a winner and now I'll wait till it comes back. I don't play that game.
Got it.
Take your medicine, move on.
Got it. So basically, then for each stock category, if the stock is a, say, energy stock or a cyclical stock, let me broadly define these stocks to be cyclical, or if a stock is a growth stock or a value stock, the propensity to move is different for each category of stock. And based on the category of stock, you will decide when do I take profit, how much I want to ride the profit, and or how much I want to book the loss. Can I make that conclusion?
Yes, but it's a little more nuanced than that. So it's really more dependent on how is my trading going? How is the market treating me right now? So another really good example, back to the Devon Energy example, I was having a tough time making progress in swing trading at all. So I am much more likely to take quick profits and finance some gains and get some black ink in the book, than I am to say, let's just play this one, the one that's working, for a much bigger move. And a really good example being, I sell the stock up in here, and then within a couple of days, this has been the theme that I've been seeing. If you haven't been taking your profits quickly, there aren't any profits to take. Yeah. Where if I'm in a market where everything I sell is going higher, and not just a little bit higher, it is just continuing to ramp, that is telling me, that I'm in a different regime potentially. But your point about groups is one that's important. So I base my work on, if you read O'Neill's book, or if you read specifically Mark Minervini's books, he talks about classic, the biggest winners in stocks, what he calls sort of the classic growth groups, come from 4 areas. Commodities are not one of those areas. So I try never to have favorites in terms of an individual name or a pet stock I like or love or want to hang on to. But if there are stocks setting up and they're in those areas, then those are names I'm much more likely to play for a bigger move. And if I'm going to play anything for a bigger move than just sort of a 2-to-1 swing type trade, I want to see some type of fundamentals on the table.
Sure. So, I mean, we have not discussed fundamental yet. This is purely price action. So how do you add fundamental layer on top of this for a decision making?
Well, so this would be a good example. So if you look at energy, right, on this same window, this is the same window I'm running through, you have your earnings and sales right down here.
Yeah.
So you can see this stock has, here's your EPS, enormous earnings, enormous sales,
Okay.
the past 3 quarters. As far as earnings and sales go, the bigger the better, as far as I'm concerned. I like to see, and actually even below this is margins as well. So it has all 3, where I can see how have they done, and then I will look at this window over here where this tells you sort of the EPS historically.
Yeah.
And like, here's a really good example. You can see 2021 was a massive breakout in earnings compared to the prior years, and 2022 is forecast an even further big breakout.
Yeah.
Now again, this is a little more cyclical in nature because it's oil. But still, I would much rather see the earnings on the table than assume they're going to come down the road. So I look at both in tandem, and if a stock is setting up technically and it has the earnings and sales, even higher potential conviction.
Sure. This is superb. I mean, tell me one thing. Why can't we have a screen? And this is what we have done in StockEdge actually, where we have combined RS with fundamentals and limit our scan to limited stocks. So why can't we create that screen where we say that companies which has given good fundamental results and also showing certain RS rating? So that list of 227 items will automatically reduce to maybe 50, 60 stocks. So can you create that screen?
Yeah, you certainly could. I have found that I don't want to say the magic, there's no magic in this, so let me be careful. I have found it is more helpful, rather than saying, I just want to see 8 stocks, to go a little bit wider and then me roll up my sleeves and trim it down.
Okay.
Because I'm more likely to miss, maybe the technicals are perfect, but there aren't any fundamentals, or it's just sales, or you know what I mean? There's a few other caveats and nuances. Like I said, honestly, I have been running the same screens. Like, there's nothing fancy in the screens. I get where you're saying, hey, maybe I don't want to go through 600 stocks a day. Well, I can't help you there. That's just part of doing the work, But in the same, the software now, I feel like I don't care what software you're using. It will do what you tell it to do, So you can develop that. I know lots of guys who are sort of in this similar family that run lots of different screens. And I'm still amazed at how sometimes the best guys, it's not that our lists are identical, but we're often focusing in the same areas. It still seems to distill down kind of the same ways in some regard.
Right. Fair point. I mean, all our discussion and what you are saying is so much by a person who has real experience. So I can resonate with you. I can clearly see that, yes, you actually do it. That's why you have been able to kind of give these replies. Let's just change the topic. Let's talk about Tesla. Let us see the chart of Tesla, because there's no fundamental there, right? Or there is fundamental. Let us see. And
Well,
how
there
do you
is.
handle companies like Tesla, the kind of movement they show? How does an RS try to capture them, either on the upside or the downside?
Sure. Well, Tesla, let me see if I can go back. I traded Tesla quite a few times in 2020. I don't remember if I traded it last year. Let me see. Hold on here. So right here, a good example would be when a stock, like there's really no pivot there's no low risk entry point for me to play.
Right.
Over here, you kind of had one, but the stock had come off quite a bit. I know some guys who were messing around with this pivot right in here. You can kind of, it got very tight, and I know some guys tried to buy it, and I think this move down stopped them out. I can show you. Let me just see if I can get this to back up. Oh no, it went to the wrong period. Hold on one second. We can edit this part out while I get this chart to fit. Okay, here we go. So this is what I was looking at right in 2020. This is sort of the chart of Tesla in 2020, where you had your COVID crash here. It came back, and if you look right in here, price action got very, very tight, and the volume came down. So okay. Tesla has been one of these stocks that has truly been remarkable, right? And everybody's had an opinion on it, and all the fundamental guys. And there have been earnings and sales on the table as well. If a stock is moving, it doesn't mean I'm interested in it. And in fact, most of the time, if you just ask me about a random stock, I would say, well, it probably doesn't meet my criteria right now, but I'll put it on a watch list. Or let's say you love something fundamentally, and they're gonna do all this great stuff and everything's, I'll wait for the proper technical entry point. So I was buying Tesla right here, as it was starting either in this day or that day, as it was starting to break out of this consolidation.
And what was the RS value then?
It was 98 or 99, I believe.
Oh, okay.
It was extremely high. Then, of course, it continued to rip. I traded out of it into this run, and that was it was sort of a one and done for me. It was a great trade. I made multiples of my risk, and you let it go. I'm not looking to land a whale. It's more of, I've traded stocks that have gone up hundreds of %, and I've traded stocks that have gone down to zero. So, if the stock continues to go without me, it's going to be the same thing. So like I said before, if you looked at a lot of my entries and I sent you hundreds of my trades, you go, oh, that looks like the last one and the last one, and the last one. I'm pretty disciplined in terms of just waiting. And if Tesla never sets up again, then I'll never trade it again. It's just that simple. I may have, and I love the car, by the way. If you want me to ask my opinion on the car, I think it's a great product. And I think, at least in the United States, if you've never driven one, you should go test drive one. It really is a great company in terms of what they're making. But yeah, that I don't let that necessarily influence my trading.
Sure. I have a question here. So say, based on your risk reward, you exited the stock, and suppose the stock is consolidating after there, and RS still remains high. Would you make an attempt to re-enter at higher price?
Absolutely.
Okay.
I do that all the time. So a good example, but Tesla just doesn't have multiple pivots, but a stock that puts in another base and sets up again, wash, rinse, repeat. Same thing. Absolutely.
Sure. I want you to look at the chart of Facebook. I want your thought process on the recent fall and how trader like you would have dealt with these kind of falls. maybe you have not traded, but it's just that I want to take your opinion, because I can clearly see in Indian market, a lot of similar kind of stories are coming where stocks are falling by 20%, 25%. How do you deal with these kind of actions?
Right. Great question. Let me bring it up here. Well, a couple of things. So one is this chart. Well, this stock is completely broken as far as I'm concerned, and my technical work tells me this is actually what Mark Minervini refers to as the 50-80 rule, which means that all and the markets are full of examples like this right now, full of them. And the 50-80 rule just says that if you're a leading stock, high relative strength, however you want to think about it, that 50% of those stocks are going to lose 80% of their value, 80% of them are going to lose 50% of their value. Facebook hasn't quite gotten to 50%, but we're close. 385 down to 207 as of today. I'm willing to make a gentleman's bet with anybody. This is going down 50% before it's all over. And there were people probably even months ago that said that's not possible. Facebook won't do that. Look at Netflix. Look at PayPal. Look, I mean, we could look at Square. We could go through, look at Zoom. I mean, some of these past leaders aren't just broken. They've been absolutely crushed. So this is a complete avoid for me. Before, I will not see the stock again until it hits one of those screens. It's not going to hit one of those screens though until it's in some type of a long-term uptrend. Let's look at the weekly just for argument's sake. Here is a huge, enormous red flag. I'm going to point it out right there. This is the largest volume on the largest decline in this entire move. That is major institutional selling.
Yeah.
I mean, this is like the dinosaur is, getting out of the bathtub, if you will. They are leaving in mass. And not only did you have one, then you had another one. This stock, this is the equivalent of a marathon runner who just compound fractured his leg.
Oh, okay.
You're not, in my view, you are not going to come back from that quickly. I mean, you could just run how much stock changed hands there. And those are institutions that are piling out. That's not, I can't remember, it was William O'Neill. That's not your Aunt Betty selling a few hundred shares in her retirement account. Those are millions and millions of shares being sold. Now, if your game is value and distressed stuff or whatever, I'm not going to argue with you because that's not my game. I'm saying all the technical evidence says that rallies should be sold at this point. And this is a major, major trend break and character break in the stock. We could probably go back and be curious just to look at the monthly. I think this is the largest monthly decline in the history of the stock. I mean, that is just not good action. There's no other way to put it. So that's my read.
Okay, so let's go back to daily and let me ask you this question: that if suppose you had a position sometime in the past, when would have been the last position and where would have been the exit based on your RS and price pattern theory?
Let me look at a weekly just to see. So normally, like I don't see a base, like probably somewhere in this base, I would be looking, or maybe up in here, you've got a several week base with a tight area potentially. I'm trying to remember if I traded this in 2020. I don't think so. I think it was a little too V-shaped for me. But it's the same idea as some of those other examples. If I don't see a consolidation, I don't get involved. It's just I'm looking for those low risk entry points. If they don't present themselves, look for something else that does. I mean, I've traded Facebook a few times in its history, of course, but not that I can think of in the last year or two.
Got it. Got it. Very interesting. Let's take one more stock, the last stock for the discussion.
Sure. Well, I'll show. Let's take a look at gold,
Yeah.
which
Wow.
isn't a stock, but I actually bought some today. This is GLD, not the actual futures. But
Okay.
if you look at this, I don't normally trade on this big of a time frame, but if you look at this monthly, this is a enormous cup and handle, which is a
Yeah.
chart
Yeah.
pattern I look for on multiple time frames.
Yeah.
I won't get into the fundamentals of gold. I am not a gold bug, though. Generally, when gold sets up technically, I get involved. I have no idea if it's rallying because of stuff in Russia, inflation. I just know that, on the weekly, I had an alarm at this level. If gold started trading above this level, I wanted to know about it. So I initiated a position. It's in some ways this pattern here, though, is the same pattern I would trade on any time frame.
Okay.
It happens to be a monthly of 15 years. That's just coincidence. If I saw this on a daily or a weekly or a 60-minute, I would go, that's a nice handle over here, where and this is another again, this is a handle, but this little pivot right in here is called a cheat area,
Okay.
where you're trying to cheat in Minervini's terms, getting ahead of the breakout to new highs. And the reason I like this specifically, this is sort of like a little bit of a pro tip, but sometimes if you get these areas, if they're tight enough, you can get a multiple of your risk before the issue is at new highs. So you can sort of stack the trade to say, I'll take half off at a profit, pay for the trade before it really even takes off. And now I financed the ability to hold the remaining position at no risk to me. Does that make sense?
Yeah. Yeah.
I think that kind of thinking and that kind of position management is usually misunderstood and highly underrated, in my opinion. So in situations like this and like that, that's exactly what I'm trying to do. I'm trying to position myself in a way that I can take a piece off of the trade, and then potentially play it for a bigger move. So gold, I'm trading in a little bit bigger time frame, smaller position because the stop was a little bit wider. But when I see a chart like that, that jumps off the page at me.
And the RS for gold is also S&P because it's an ETF, so you compare it with an S&P, right?
Yeah, in this case, I'm not really looking at the RS in gold, relatively speaking, because it's a commodity. It just happens to be there, and I'm just using the GLD chart. But if gold's kind of something that I track a few commodities, just generally to see gold, oil, things like that, just to see what they're doing. And I probably trade gold once every few years. If it sets up though, and the chart makes sense to me, I'll trade it. That's one where I don't look at the fundamentals because, like I said, I'm not a gold expert. I have no idea ounces in the ground and all that kind of stuff. So I tend to just default to the technicals.
Okay, fair point. Cool. It was amazing interacting with you. Awesome. I mean, it can't be a coincidence that your name is Mark and Mark Minervini name is also Mark. So there has to be.
I don't know about that, but maybe, I don't know. I've had somebody actually ask me that before. I don't put much stock in that, but perhaps.
No, it's great interacting with you. How do we start? Which book of Mark Minervini we should start with? First book one should read.
His first book is called Trade Like a Stock Market Wizard. Sorry, and the one I like them both. Think and Trade Like a Champion.
Yeah.
I've read both multiple times. I think they're both fantastic. They're really like a two-set volume in my view. If you buy one and you feel like, wow, this really speaks to me, you should just buy the other one, because it's sort of one just is like more advanced work on top of the other. Or I think in his mind it was like I had so much stuff I couldn't get it all in one. But it's sort of soup to nuts in terms of how he thinks about things, and also inspiring. Look, there's one thing I'll say about reading about any great traders. If it doesn't motivate you, to roll up your sleeves, and trading is really the ultimate bet on yourself.
Yeah.
You've got nobody else to look at. We
Yeah.
live in a world now where everybody loves to blame somebody else, but in trading, pretty tough to do. And so to have somebody, like him kind of tell you his story, and there's nobody who shouldn't have made it more than Mark. I started from pretty humble beginnings. He started from extremely humble beginnings. So, and that's, Market Wizards, these other type of books, even Reminiscences of a Stock Operator. If these don't inspire you, 100 years ago, Jesse Livermore was, trying to get money from the bucket shops to work his way down to Wall Street. And this is, these markets still present a great opportunity. And so, yeah, I would just encourage people, to get inspired and roll up their sleeves and do some real work.
Yes, and that's the reason Face to Face is here. And that's the reason we are recording, because your video is going to inspire a lot of people in India. Thank you so much for giving your best, I guess, to me. And I hope to stay in touch. And I'm sure that a lot of my learners would like to stay in touch with you through your Twitter handle. So just like you have kept it open for all of us to DM, I'm sure you will get a lot of DM from people in India after the video release. So I hope you will reply to them.
I would love to. Thanks so much for having me. Yeah, love to engage with folks on Twitter. That's kind of something I've just started doing. So sure, seek me out there, and really appreciate you having me on.
Thanks a lot. Thanks a lot, Mark. Really, really liked it. Thank you so much.